Welcome to the CFD Weekly overview of the global financial markets. December rose unexpectedly, while US retail sales slowed down in November. The ECB held its regular meeting on Thursday without offering many new insights, with Christine Lagarde officially in charge for the first time. The British pound was highly volatile. First, it strengthened strongly, crossing the 135 level when the election results showed a historic win for the ruling Conservatives. However, the UK press reported on Tuesday that PM Johnson will set a new deadline to prevent any extension of the Brexit transition period beyond 2020, fueling fears of a hard Brexit. The pound paired its election victory gains on Monday and Tuesday. The Scottish National Party, which won an overwhelming majority in Scotland, plans to push for a new independence referendum. The Japanese yen weakened after the US and China lowered tensions and apparently reached a Phase 1 deal on Friday, which is due to be signed in Washington on an unspecified date in January. The dollar index, which follows the performance of the US currency compared to 6 major global currencies, continued to slide and traded below 97 points. The Turkish lira fell to its lowest level for 2 months against the dollar, as President Erdogan threatened to close US bases in Turkey, including one that houses nuclear missiles. The crisis in US-Turkey relations took a turn for the worse after US lawmakers on Friday recognized the mass killings of Armenians at the end of the First World War as genocide. Gold prices rose amid pessimism over the trade deal announced by the Trump administration last week. Some market participants remain suspicious about Chinese officials' hesitancy to speak about the deal. However, US stock indices continued to hit record highs as investors were relieved that the US decided to cancel fresh tariffs which were due to be imposed on Chinese goods last Sunday. Crude oil prices rose last week, testing the 60 level, with oil bulls still celebrating OPEC's decision to deepen output cuts by 500,000 barrels per day until the end of March next year. Crude was also supported by the first phase trade deal announcement, which traders hoped would be enough to prevent a sharper slowdown in oil demand next year. You've been watching the CFD Weekly overview of the global financial markets.